Hi team, it's Matthew Bateman here again with what's making news in the Australian property market this week. So let's start with a quick look at auction clearance rates, which bounced back strongly last weekend, especially in the two major markets of Sydney and Melbourne, with clearance rates back over 70% despite strong numbers of properties for sale at this time of the spring selling season. In a sign of strength in the Mornington Peninsula market, a Macrae home has sold at auction for $1 million above the reserve price. The 4-bedroom home at 5 to 7 Coburn Avenue sold for $2.9 million as 6 spirited bidders fought for the slice of Mornington Peninsula real estate. Now, this was the first time that the almost 3,000 square metre property had been listed on the market, as it had been held in the same family for the last 130 years. And we've seen the $1 million above reserve price broken several times this year, with homes in both Wallara and Point Piper in New South Wales achieving the same $1 million plus above reserve prices just a few months earlier. Now, this seems to be in stark contrast to the report this week by Macquarie, which has called the peak or the top of the Australian property market for March 2016, which will be followed by a correction of 7.5%. Now, many property analysts, including Stockland's APM, the Real Estate Institute of Queensland, and even superannuation columnist Peter Switzer, have hit back, with Switzer going on to say that the forecast bordered on being stupid. Now, Stockland chief Mark Steinert responded by saying that they expect house prices to continue to rise, albeit more moderately next year, rejecting this week's forecast by Macquarie Research of a 7.5% slump in prices between 2016 and mid-2017. Now, look, as I've previously pointed out many times, there's no such thing as the Australian property market, but rather a collection of many individual property markets, all at various stages of their own individual property cycles. Now, yes, we agree that in some areas supply is catching up with demand, and we've been telling our members for years not to be investing in certain areas where the supply-demand ratio is way out of whack for capital growth. Now, that being said, we also still see great opportunities for growth in many parts of Australia over the next few years, but as always, good research is the key to finding the best opportunities. And finally, Westpac has shocked some by raising their home loan rates to both owners and investors by 0.2% in an out of RBA cycle rate rise. Westpac, of course, is blaming APRA for raising the amount of Tier 1 capital they need to hold against the possibility of bad loans as the main reason for the shock announcement. It seems that Westpac would rather pass these costs on to consumers as opposed to shareholders. And many economists are now tipping the other major banks will follow suit. And I'm sure that Westpac is hoping the other majors will follow, otherwise they could be left out alone with their pants down as disgruntled lenders take their loans elsewhere. So, a lot happening this week. I'm sure there'll be more next week. So till next time, I'm Matthew Bateman with this week's Australian Property News.